All right, well, then finishing that up, I just want to thank everyone for coming. We've got a really great turnout today. It's what we like to see. Thank you, Scott Frost and Brian Sommers, for coming in here to talk to us. Scott is the CEO of HBKS Wealth Advisors. They are a large wealth advisory firm that deals with wealthy clients as well as institutional investors. And they're here to give us talk about what they do, how they got where they are, and just give us some insight into the private sector, because I know we're all here to learn a great deal about finance, to get our education, but ultimately we want to go out to the real world and learn how to really do this. So it should be great insight. Are we good to go there?
Yep.
All right, thank you everyone that's tuning in from our world campus and from all of our other satellite campuses that were interested in hearing this. Again, if any of you have any questions online, you can email us at psbehrendfinance@gmail.com, and we'll ask them at the end of the presentation so that way you can get whatever questions you have answered. And thank you.
Okay. All right. Well, thanks everyone. All right. So I have been asked to do lots of presentations in different formats, but I will say this is my first time probably addressing an audience such as yourself, students, both probably traditional, non-traditional, maybe even potentially some graduate level types of students as well. So I don't have a library of presentation materials I can pull off of. So I'm going to kind of go through and try to come up with some topics that I thought would be of some interest to you, but also that maybe you could take back as you start formulating, I guess, in your mind, what is it that you want to do? What is it that you want to be in the future? And if you're anything like myself, I think I kind of struggled a little bit with what that would be at multiple times during not only my undergrad degree, but even as I started working in the world. And I'll show you a little bit of my background. You can see that it has changed a few times. Well, again, thank you for inviting both Brian and myself to come out and join you today. Hopefully, we can provide some insight, but I really do want you to ask some questions if at all possible. Right? I know a lot of times you sit and you try to take it all in, but you're sometimes maybe a little hesitant to ask some questions. But please do ask some questions, because this, like I said, I threw some slides together, but I'd rather just talk to you, right, and provide you with some insight. But so we'll go through and provide you with as much structure as possible. So again, I'm Scott Cross. I am the Chief Operating Officer for HBKS Wealth Advisors. I've been with the firm about 9 years now, almost. And so I'll talk specifically about our firm, HBKS Wealth Advisors, and try to provide you with some insight on how it might apply to you as maybe finance majors, but also I'm sure many of you have probably even a personal interest in investments. And so we might give you some ideas as to how that works as well. Brian will spend some time actually speaking more specifically about the asset management unit of our firm, and that's the area of our firm that provides all of our investment management decisioning. And so as Brian, as the director of that department, he can speak specifically about what we do and how we do things at HBKS Wealth Advisors. Again, I want to try to relate it a little bit back to maybe something that you're all thinking about, which is probably the career. So I'll provide maybe a little bit of insight as to the types of careers that are inside a firm such as ours. And it really isn't probably specifically unique to HBKS. It's also probably any financial services firm that deals with private clients. I thought maybe I'd throw in, and this is just, I think, very short, but maybe some thoughts that I have as it relates to what I value when I sit down and talk with candidates about the types of qualities, characteristics, strengths that they might possess. So when you're thinking about the interview process that maybe you're involved in or hopefully going to be in, you might think about some of those things and how they might, how you might be able to maybe add some color around how they relate specifically to you. Or if you think you're maybe weak in one of those areas, take some time now to think how you might want to strengthen some of those characteristics. So I called it an inventory of skills, just to try to make it fancy. But again, questions, please, throughout this whole thing, please provide some questions. All right, so introductions, I kind of went through that quickly. There's a little bit of my background. I'm a graduate from the University of Nebraska at Lincoln, so I've already found out that one of you is from Seattle, another one is from Hawaii. So I thought I was a little bit odd, but that's even going way further west than I am. So I graduated a long time ago with a degree in actuarial science. You know what the actuarial science profession is? Yeah. So, all right. So for those of you that maybe are strong in math, certainly that would be a precursor to taking some of the Society of Actuary exams, math and statistics. I was fortunate to actually have a program that went through many of the coursework that the Society of Actuaries would take. So I actually graduated with an actuarial science degree, started at Principal Financial Group, which is a large financial services firm in Des Moines, Iowa. I worked at what was called a para-actuary, which means I was an actuarial student, but I wasn't required to take any of the exams. For those of you who are familiar with the actuarial science program, it's a series of exams that provide you with a great deal of technical knowledge to be able to work inside insurance companies, primarily dealing with the pricing of insurance products, calculating reserves, etc. I had all that background, but I just chose a little bit more social than probably the actuarial science students. So I was not required to take the exams. While at Principal Financial Group, I went back and received an MBA from Burke University, which is also Des Moines, but back at night school. And that's where I started changing my course or my direction. I was kind of not so excited about working in calculating reserves, which is the present value of the future liabilities of the firm, or spending a great deal of time in, it was actually a programming language called APL. And I thought the investment side was a little bit more exciting, a little bit more appealing. And so I wanted to be on that side of the balance sheet rather than on the liability side. So that's why I took the MBA courses, and that's what led ultimately to my leaving Principal Financial Group and going to a firm called Securities America, which is really not exactly what I thought it would turn out to be, but it actually turned out to be a great experience, which ultimately led me to be where I am today, which is at HBKS Wealth Advisor. And as of right now, I see no reason for me to make a change. I'm happy where I am. I've had a great deal of opportunities to be involved in all facets of the investment management profession, and hope to have that continue. So I felt, as you can see there, Director of Asset Management, which is obviously what Brian is doing today, the Chief Compliance Officer, and the Chief Operating Officer. Well, we held all of those at once, and I felt finally now just the partner and Chief Operating Officer. As we've grown, as what small companies typically do, you wear multiple hats. And that provides you with a great deal of experience, but it also provides you with a great deal of opportunity to figure out what it is you really like to do and what you're good at. And then opportunities present themselves, and next thing you know, it's not necessarily what you thought you were going to do 10, 15 years ago, but you find yourself then doing something that makes sense for you professionally. And when I say that, it usually typically is a mix between what you want to do personally, but also financially. Right? A lot of times you're going to spend a lot of time thinking about, well, where can I make more money? Right? That'll take you on a course, but ultimately you're going to find yourself crossing paths between what makes you happy, what you do every day, but also what's most rewarding financially. So that's kind of where my background has been. That's probably way too much time on me. So what is it, HBKS Wealth Advisors? Our mission is to help our personal, corporate, and institutional clients achieve their financial objectives by providing the highest level of wealth management services through a long-term relationship with a trusted, knowledgeable financial advisor. Right. How many of you had strategic planning class? Okay. You can pick that apart. I was trying to remember now. Did I hit all of the points in this mission statement? Did we cover them all? It's funny, as I was talking to a gentleman that works with me, and I said, yeah, I remember when I first started working, everything was academic, but I didn't have a lot of practical application. Now I have all kinds of practical application, but I forgot most of the academic side. So, but somehow We switched it. But anyway, so that's our mission statement. We're basically a financial services firm, a wealth management firm. Our primary target client is a private client. So it's your mothers and your fathers, your small business owners. It's the people that you know, right? It's not typically an institution, so we're not dealing with a large number of endowment funds and those types of, I'll just say, large pots of money. So it kind of provides you with a little bit of some other background. HBKS Wealth Advisors was a merger of the Sorsey Financial Group with Burke and King Financial Services. The Sorsey Financial Group is actually a local firm here in here. There's two gentlemen, Chris and Greg Sorsey, who were American Express Financial Advisors, went independent. And then Burke and King is a regional accounting firm. And they said, we really want to provide a holistic range of services to our clients. And so we want that wealth management expertise and service offering. And so that's how the two kind of came together, and that was back in 2001. We're not a very large firm. We're 47 and a half full-time equivalents. That's human resources talk. We have probably a little over 50 people that spend some time inside of our firm. We have 10 locations. So we have, we're in states of Pennsylvania, Ohio, Florida. And the accounting firm side, we're in New Jersey as well. So the what we call the world headquarters is here in Erie on Zip Road, but we also have a financial services offering on West 6th Street down by the University. So we have 26 financial advisors, and these are typically the people that you think of when you think of a wealth management firm. These are the people that provide investment advice that they're constantly going out into the social circles, saying, "Hey, I'm a financial advisor. Why don't you come work with me? I'll help you meet your financial goals." We have 26 of those individuals. They're fully licensed and trying to grow a book of business. And I'll explain that in a little bit of detail further on in the presentation. So the other 20 people are in support roles. And so they're made up of, I'll just say, professional support folks like Brian and myself, but they could also be administrative folks. So they're spending time doing more of the administrative work that all companies need, whether that be in firm operations or in the financial services side. We have 3,442 clients. So when you think about the number of clients, that's quite a few, right? And that is actually, if you look at our peer group, that's an exceptionally large number. And that's because we primarily deal with private clients rather than large endowments. But we do have high net worth clients as well. So our average client is in the $750,000 of addressable assets. But we range as high as 55 million. And we have lots of people with 100,000 or less. So the averages are great, right? So I have my head in the oven and my feet in the freezer, but on average I feel fine. So but that kind of tells you a little bit about our size of firm. Assets under supervision. Most firms such as ours talk a little bit about their size, right? It's either in the clients or the assets that they manage. And so we're at over $2 billion of assets. And probably, most of you are a little bit younger, so you're not probably talking with a lot of people in this, but when you talk about registered investment advisors such as ourselves, to be in that $2 billion space is very good, especially when you're dealing with private clients. Obviously, registered investment advisors could be a money management firm, like a Vanguard. $2 billion is, that's a small fund. So, but when you're dealing with private clients such as ours, it is actually a rather large firm. Typically, when you see us ranked amongst our peer competition, we're in the top 100 nationally. So to have that here in Erie is a little strange. Right? I mean, when I talk to a lot of people, they're like, "Oh, we have no idea we do that much." And so that speaks to our lack of marketing. But so what is it that at HBKS we primarily do? So we obviously work with individual clients, and we provide a range of services. We sort of lead with a holistic approach to financial planning. So we want to meet with the individuals discuss their goals and their objectives, try to understand what it is that we're trying to solve for them. And it may involve any one of these or multiple one of these types of scenarios. So we have the investment management portion of the business. So this is what typically most people think of wealth management firms, stockbrokers, those types of things, buying and selling of securities, right? Investing their portfolios to achieve the greatest level of return for a given amount of risk, which Brian can speak to in great detail. And that is primarily how we get paid. 95% of our revenues are derived from the investment management service that we provide our clients. But we also provide a great deal of financial planning. And that's probably where the financial advisor role comes into play. And as I speak a little bit more about some of the roles inside of our firm, you'll see we have a large number of certified financial planners in our firm. And that's because we don't want to just manage the portfolio. We don't want to just manage their assets. One is that we kind of view investment management as somewhat of a commodity. You can go any number of places to get investment management help. You can go to fund companies directly. You can go inside your 401k. There's certain types of models you can invest in. You just sign up and they allocate and rebalance for you. The robo-advisors, which I'm sure you'll have some discussion about, they're trading in they're automated trading in rebalancing systems. You answer a risk profile, right? So there's a lot of things, and they're all based upon some of the very similar principles that I'm sure many of you have learned or in the process of learning, and Brian will describe. And that's, but that's the investment management portion, but that's not where we feel we provide all of the value for our clients. It's actually getting to know the clients, knowing how to ask the right questions so that we can not only solve their issues today or in the future, but also start having them think about them. Because if they don't ask questions, if they don't know which questions to ask, right, how are you gonna solve their problems? If they're just kind of keeping everything inside and not expressing some of the things that they need to address. So we provide financial planning, that's retirement planning, that's wealth planning, it's transfer of wealth, it's setting up gifting strategies, all kinds of things as it relates to financial planning needs. We also have most of our financial advisors are insurance licensed agents. So we typically don't lead with an insurance type of discussion, but one of the partners at our firm has a nice way of saying something. There's three primary risks that our clients are fearful of. One is dying too soon. Another is living too long. And the third one is becoming disabled. And so insurance obviously is a critical component to solving two of those three scenarios: dying too soon and becoming disabled. So we can provide those types of solutions to our clients if that client needs that type of solution. Retirement and business services. Because we're affiliated with Burke & King, an accounting firm, which I'll speak about here in a little bit, we do have a lot of business owners, small business owners. And so we have a sector of our business that we focus on providing employer-sponsored qualified plans. So this is your 401k and profit sharing plans. So we can provide the business owner education, plan design, and then provide educational opportunities so that their employees will actually sign up and utilize the plan. Business succession, we have a relationship with HBK Corporate Finance, so we can help our business owners decide what they're going to do. There's three things that they can do. They can transfer their business to a family member, right? To one of their children, most likely. They can sell it, and they can sell it to externally, and recover the tremendous amount of value that they've built up in their business, or even possibly their employees through an ESOP plan. And then, or they could exit it altogether and just simply just sell the business to an outside investor. So we have relationships that can help those business owners not only get the right guidance, but also through partnerships. We don't actually do this, but we have the partnerships to help us. Actually give them the resources to actually structure and complete the deal. And then lastly is Hillbarth and King. Again, I've said a couple things about Hillbarth and King indirectly, but it's technically not the parent company, but the owners of Hillbarth and King, the accounting firm, are also the majority owners of HBKS Wealth Advisors. So again, Hillbarth and King is a large regional accounting firm started in Ohio in 1949. It is approximately, I think they have over 300 employees, and they have 11 offices. So we had 10, I believe. So there's only one office that we don't have a presence in, and that's because Hillbarth and King recently acquired an office in New Jersey. And we're actually looking to figure out how best to integrate our wealth management services inside that office. So that may result in moving people there, or it may require us to make an acquisition and have to promote it. And so we have pizza. So I'm done. There's no diet now. All right. So then we have Hillbarth and King also provides a lot of services to not only personal clients but also small, medium-sized business owners. So when you think of a typical accounting firm, you're going to see the tax, audit, and accounting. Any accounting majors? Okay. And how many of you have had Jim Boss? Professor Boss? Okay. So smile. That's good. Mr. Boss is he's a retiring partner in Hillbarth and King. So obviously you know of him and his incredible dedication to furthering financial planning and accounting. But he's great, right? But he spends a lot of time, obviously, on the traditional side of the accounting work. But as we did on wealth management, we want to try to provide solutions to all of the clients, independent of what their specific requirement is. Hillbarth and King is trying to do the same. So it's starting to add more of the consulting experience and providing other services that are not part of your traditional accounting firm types of solutions. You could argue, right, as I said, that you can go find investment management expertise in any number of places, online, through software, et cetera. You can do the same thing, right, in many cases for tax, right? Just can't do it for an audit, obviously, but for a tax, you can. And we have taxslayer.com and all the other football sponsor pages. So, but they also have HBK valuation and forensics. So they spend a lot of time valuing businesses. So when we talked about succession planning on the wealth management side, we can bring in an expert into how you value a business. It also kind of crosses over into what's called litigation support. So a lot of the divorce cases involving people that own business. What's the largest value of a business owner? What is their greatest asset? It's their business. How do you value that in a divorce proceeding? It's very difficult. So we can kind of leverage that type of service in those situations. HBK Energy is something relatively new for those of you in the southwest portion of the state. And you're obviously familiar with the shale and the Utica types of boom that's happening. So we're trying to provide landowners expertise in being able to value, structure deals, et cetera. So we're providing them a great deal of with insight into how to handle that great asset as well. And then I spoke already a little bit about HBK Corporate Finance, and that's the whole kind of investment banking relationship that we can bring to the table. All right, so a lot about the firm. As you can see, it's quite complex, right? I suppose most of you probably had a little bit narrow view of the profession, right? Providing, probably stockbroker would probably be right, the majority of your definitions. It's certainly not that today. It's a far more reaching relationship that we try to provide our clients. And the types of skill set that you're going to leverage is significantly different as well. So the two primary ways through our organization that we service our clients is in the client service side and then in the support growth side. So on the client service side, we have what we call senior financial advisors. So these are fully licensed individuals, and I'll tell you a little bit about what that means from a securities and industry perspective. But they have all of it's a highly regulated regulatory environment that we operate in. And so there's licenses to sell securities, to have insurance licenses, et cetera. Senior financial advisors are typically people that are fully licensed, have all the professional credentials, have been tremendously successful in building a client book of business. So when I say client book of business, that means that there's 3,400 clients that we have. They've been primarily responsible for convincing them that what we have to offer is of value to them, and so they want to come and do business with our firm. So the senior financial advisors have been able to do that successfully for multiple years, and in many cases for decades. But because they're good at the relationship side of the business, we provide them with a great deal of operations support. We provide them with financial advisors, advisors, associates, and administrative assistants. So there's a lot of times where our senior financial advisors are bringing in relationships, and they're sort of quarterbacking all of the tasks that need to be done. They're not managing the assets per se. They're not even probably running the retirement plan analysis. They're not probably getting the quotes on the insurance policies, but they're managing that whole process. The rest of the support team is probably doing all of that work. So we provide our client service teams with a great deal of firm support. So we have the asset management unit, which does the investment management activities. We have operations. So as you can imagine, with a firm such as ours, with that many clients and with all of the technology that we leverage to run a business, I have people that are specifically responsible for many of the technology, a lot of the operations, the accounting types of functions that go into business, et cetera. So we have a lot of people that support the business from that perspective. Compliance, I mentioned already that our industry is very heavily compliance burdened, but it's also a requirement. We talked a little bit about that retirement plan unit, so the employer-sponsored plans. We have financial planning expertise that we can bring, so we have people that focus on the financial planning process, writing the financial plans, and helping solve some financial planning issues, and then obviously marketing and practice development. So we have people dedicated to the marketing. So which I didn't have enough brochures, so I apologize. So I did pass out for the first, I guess, the people that were here first, they got a copy of our client brochure. If you're interested in one, I'll try to get you another one. Marketing people also have these really thick business cards that you can use as a weapon. I'm happy to share them with you. I don't know if you want them or not. I'll leave them, and you can grab them. You can use them as you can even put them in a fishbowl, maybe others do that. So with that, I'm going to take a second and see if there's any questions at this point before I let Brian speak a little bit about himself and the estimation. Yes.
I have two questions. The first one is, are there any successful young advisors at your firm, or are they typically more experienced in the business world?
That's a very good question. I would say that in our particular firm, they're primarily usually more seasoned. If you go into the financial services industry, and typically on the financial advisory side, when you're actually trying to grow your book, it's a slow go right away, right? Because if you think about it, you're younger, you don't have a lot of experience, and so you're trying to convince people with lots of money, say, hey, come and let me do all of your investment management, let me do all your financial planning. And so it's typically hard, right, for somebody that doesn't have a lot of experience and or a lot of relationships to make that kind of money that they can, live comfortably off of that type of scenario. So what we typically do is we usually wait for somebody to have taken a job with a larger, more established firm, somebody that you'd see on your Golf Channel advertisements. Get all of your licenses, get all of your experience, get all of their training, because they have incredibly powerful training programs. Kind of get yourself going, then come to our firm. And then we can provide you with the same level of resources. and allow you to probably have a little bit more independence and a little different kind of environment. But yeah,
If I could just add one thing to that too. One of the roles that I play in the firm is whenever we have a younger advisor that has a very sophisticated investor or client that they're going after, a lot of times they'll bring me to the meeting because, you know, I support them on the asset management side. So then the client can see, well, you know, yeah, we've got, while this advisor is very young, he has a very seasoned, sophisticated team behind him to answer the money. So that helps as well.
And when that does happen, like when a young advisor does have somebody like you, for instance, with them to help with that the negotiation, will you guys kind of like split the percentage of what you make off of that client?
No, my role is purely in support. I don't, I don't pay commission. Whenever I go support the advisors, anything that they would bring in, that's still their entire business. That's their.
And maybe if that young kid or somebody that you helped could help. I'm sorry to keep asking questions, but maybe that person, I guess, could like return the favor at a later point, right? I don't know.
Yeah, I think for the most part, most of you know, when we say young advisor, we had a lot of people that are 25 and, you know, started in the industry and was out from the age 25. But you know, somebody right out of college, that's the one I was trying to answer the question. But we have lots of younger financial advisors. And the beauty of our organization, and I probably didn't spend as much time as I probably could have, but in that team structure, you know, that senior financial advisor has, you know, years of experience, you know, tremendously talented in all aspects of the industry. Typically, our financial advisors get paired, and that's who they mentor. That's who they become. They learn how to exist in the business. So we have a little bit different structure because we're not primarily variable-based compensation. So many of, when you go to work at like a Northwestern Mutual, you know, you're going to get a salary for some, you know, finite period of time, and then it becomes, you know, you get paid what you do. We're a little bit less focused on that because of the number of clients. We hire financial advisors to help with the servicing of clients because we have so many of them. And so you get paid a base salary, typically larger as a percentage of the compensation, larger than what it would be, you know, in a typical regular kind of environment. But that's why I said we don't hire younger people, because we expect them to basically subsidize themselves by being a book. We'll make, you know, we'll kind of reward them for that by giving them a higher base.
So what does your idea of like financial advisor look like? Like when they're coming in with us?
Yeah,
Like,
that's a good question. I do have it at the end. I'll probably answer that a little better. But I'll just summarize it. They have to have it. It doesn't look like anything other than when you're sitting across the table, you're going to know if they have it or not. Because it's a sales book. You know, you have to have a dynamic personality to be able to communicate effectively the value proposition of our firm to a client and have them trust you and believe that what you have to offer is of value. So it's a sales, but I think sales brings a bad connotation because it's not. It's a convincing conversation that you have with the client to make sure that it's a good mix. And so there's so many things that go into it. It's really hard to really kind of quantify. But I'll talk about some of the things that I do with. Yes?
I know you talked about your valuations department valuing small businesses for divorce. Did you guys experience anything with the inflation prices not keeping up with the Medicare reimbursement with valuations of doctors?
I don't know. To be honest with you, the Burke and King spends a great deal. That's their focus. I don't have a lot of interaction with their technical, you know, valuation. So especially as it relates to that particular question, I could give you an answer, but I think that's told you I didn't get how much time. So, but I would get, you could probably, if you go through a business valuation, right, it's all based upon multiple set of factors and assumptions, right? And so if those assumptions are changing, certainly they're having an impact on valuations. Yes, sir.
In regard to your investment management, as a company, do you think you guys have like more of a passive approach where you just find the natural S&P does, or do you think you're more aggressive trying to find those stocks that are undervalued?
If I answered that, I'd be taking Brian's presentation second about, so I think we'll have Brian answer that, and I think you'll get multiple answers.
Scott, you mentioned the energy piece that you guys are working with. Behrend, our finance program, will be launching a 2-course sequence in energy finance starting in the fall. So it will lead to all of the learning objectives will be mapped to the energy risk professional designation by GARD. So if we have students that are potentially considering that as a track that they would be interested in, how would that work in terms of where, what are you all doing in that area? Because again, obviously this is a growing area for people that.
Right. I wish I had Steve Frankhauser here, who's basically the leader of that entire initiative. Steve is in our Pittsburgh office on the Hillbark and Kane side. So, what I would suggest is that we have him come and speak to those students specifically.
Okay.
Because he would be able to probably, help them out a little much, like I'm providing maybe some guidance as to all the potential opportunities in that arena. Yes, sir.
I just saw a stat the other day that the average retirement savings for the country was only $20,000. Do you have any insights into why that would be, or what's the problem behind people not being aware of that?
Well, I was probably in that. That's probably, I think most people, spend more time living today than planning for retirement. It's as simple as that. And I'm not that dissimilar. I mean, when you start managing cash flow, you're doing the cash flow, and saving for retirement typically means taking some conservative approaches to today on how you live today to ensure that you maximize that. And again, with averages, there's probably a lot of people that can't afford anything, and are driving those numbers down. But it's not surprising, and when you think about our average account size, $700,000. When you think about that, most of our clients are probably, in their late 40s to 50s, probably, I'd say probably in the lower 50s. Now, that's not a great deal of time left, right, to have a nest egg that big, especially if you want to live in a similar fashion that you are probably today. But it's all about planning. You see all kinds of commercials that talk about the importance of planning and so forth. And that's, quite honestly, half the time we sit there and work with clients and almost just talking about their budget. What are they living on today? What are they going to be able to live on in the future? Let's make some assumptions and let's figure it out.
The good news is I have read a lot that your generation or these people in their 20s are much better about beginning their saving earlier than our generation was. So you're close enough.
Okay. All right, so I'll turn it over to Brian, and he'll talk a little bit more specifically about our asset management process.
Scott?
Okay. Good evening, everybody. Good to see everyone. First, I just want to talk a little bit about myself and how I got here. The first thing that you'll notice as you look at that is, I don't know what the stat is today about how many jobs you'll have before you retire, but I think I'm skewing those numbers up. You know, whenever I started, I think the average person only had 2 or 3 jobs, but now I know that number's much higher, and I have evidence of that. You know, again, that you never know where your career, your life is going to take you. But graduated from Indiana University of Pennsylvania, IUP, with a economics major, and then I went on to get my MBA at the University of Pittsburgh, at the University of Pittsburgh Cats Graduate School. After I graduated with my MBA, my first job was at Key Asset Management in Cleveland, where I started out as a research analyst, and that was where I really fell in love with investing, and I really learned the basic tenets of my investment philosophy that I still have today. There was a great group of people there. Actually, I was an analyst for a woman who was the very first mutual fund portfolio manager in the country. A woman by the name of Judy Jones began managing the Victory Value Fund in 1968, I think it was. But anyway, wonderful woman. Learned a lot there. Also was a trust officer and managed some individual trust accounts. Moved from there. I'm originally from the Pittsburgh area, so I wanted to get back to the Pittsburgh area. And I went to work at C.S. McKee, and it's sort of described the difference between wealth management and institutional investing. C.S. McKee is an institutional investor, so that was where I really sort of cut my teeth in helping manage assets for much larger groups, endowments, foundations, corporations, state entities, that kind of thing. Then I moved from there to back to the wealth management area. Went to work for a small RIA, McKinley Carter Wealth Services, where I was their chief investment officer. Was in charge of deriving all of their investment processes and strategies and so forth. Did that for a number of years, and then I thought I wanted to do something a little more entrepreneurial. So I joined a group of guys who were starting an outsourced CIO business, and we actually were fairly successful. But what we did was we went around and took my experience as a chief investment officer and signed up very small RIAs that couldn't afford their own in-house investment management and wanted to outsource that to us. And so did that for a number of years, learned what it's like to be a small business owner, and also how difficult it is to be payroll at times. And so whenever the opportunity to come to HBKS came along, I met Scott, I jumped at the chance because it's a great firm, a lot more stability, and I'm still doing what I've really been doing for the last 10 years or so, and that is designing portfolios in centralized asset management. So, once again, you never know where your life's going to lead you. One thing that I will say is that you'll see that both Scott and I are CFAs, and I'm not sure how many of you are familiar with the CFA.
We're a university recognized program.
Okay, great. That's great. I mean, if you plan on doing any type of research type position in the investment field, I would highly recommend going that track. Okay, just a real brief outline of what I'm going to talk about. First, I'll talk about the asset management unit within HBKS and the various roles that we have. Then I'm going to get into a little more detail about our investment management philosophy. Real quickly go through that. I don't want to, that's probably going to be up to the boring part, so I don't want to bore you too much. Talk about the different portfolio options that a client would have coming into HBKS, and then talk about our process a little bit, and talk about how the roles play into those different processes. Okay, I just wanted to put this up here to show the structure of the asset management unit. I'll just talk a little bit about what each group does. First of all, I'll start with the center block, and that's me. And basically what I do is I oversee the HBKS investment management process. help determine what changes we're going to make to our models, help determine our overall, what our asset allocation is going to be, what our global macroeconomic outlook is going to be. But I obviously don't do that in a vacuum. There's a lot of resources, and then whenever we do make a decision, it's actually a recommendation that we do take to the investment policy committee. The investment policy committee is the entity that actually makes all the decisions. I chair that committee, and I bring the ideas to the committee. It's comprised of everybody in the asset management unit, including Scott, and 3 of our more senior advisors. And that really drives the investment philosophy of the firm. The other thing I wanted to mention is on the right-hand side, I've got a box for a research provider. We do pay a good bit of money for an outside research provider that provides us with manager due diligence, asset allocation guidance, both on a strategic and tactical level. And as you're thinking about your career paths and where you want to be, one thing to keep in mind is that firms like ours make a business decision. Do we want to bring those type of jobs in-house, or do we want to basically hire a firm to do it for us? And as Scott had mentioned, with all of the competition and with the robo-advisors, margins are really coming down on the investment management side of the business. And so, these outsourced research type of places are really getting a real niche with businesses like ours, because they can essentially, if you look at it from our perspective, we are hiring a team of investment analysts at a fraction of the cost. And so it's really a very scalable decision for us. So the information comes in to the investment department. I process it. The investment policy committee makes the decisions, and then once those decisions are made, it gets funneled into the investment department, and that's where we have a number of people who actually do the portfolio implementation. One of it is an asset management specialist, and that person does all of our trading and our coordination between the asset management unit and the advisors, coordinating data flow. They help the advisors to make sure that the accounts are set up properly and gets invested properly, and then do the trading as well.
Former Penn State Behrend graduate.
So that's that role. Then once the portfolios are actually designed, created, and traded, then the client reporting is handled by our asset management systems analyst. And what his role is to bring all of the data in a download. It's a lot of data manipulation. He's got to make sure that it comes from the custodian into our accounting system, make sure that the data is clean, checks the integrity of the data, maintains it, ensures its accuracy, and then also generates the monthly and quarterly reports that are both on a customized basis and a standard report basis. So those are kind of the different roles. Any questions on that? I just want to talk a little bit about our philosophy, and I won't go into a lot of detail, but basically it's our objective to deliver to our clients an integrated wealth management solution, and we design investment strategies with a conservative, broadly diversified on a global basis portfolio. Diversification is the primary tool that we do utilize to manage risk. Many people will take a look and say that, well, our only job is to get a return for the client. Well, that's really not true, because we pay just as much attention to the risk profile of the portfolio as we do the return in the portfolio. Our goal is to maximize the portfolio's expected return for each client's given level of risk. And I don't want to get too technical, but is everybody familiar with the Sharpe ratio? So that's one of the primary factors that we take a look at, is that we try and optimize each portfolio to gain the maximum return per unit of that kind of risk or Sharpe ratio. And we maintain our investment discipline through multiple cycles, and we like to keep investment costs extremely low, like keeping trading costs low and keeping the investment management costs low. And one other thing that I did want to mention, is everybody aware of the difference between the strategic allocation and the tactical allocation? And what we do is whenever we're initially designing the portfolios, we do a portfolio optimization, and we are taking a look at what asset classes we want to include. The typical asset classes are equities, fixed income, and cash. We also include alternatives, which I'll talk about in a little bit. But then once those return expectations are set, the portfolio is optimized to give us what the optimal allocation is between those asset classes. And that becomes our long-term strategic asset allocation. And we don't like to stray too far from that allocation, but we will make very subtle tactical shifts if we see there's a market dislocation somewhere, or if there's an asset class that's extremely undervalued or overvalued. We'll make very subtle shifts. We don't stray from the tactical allocation too much. And this next slide just talks about the reason why we feel so strongly that we don't stray from the tactical asset allocation. Which assets are chosen for investment and their percentages is the vast majority of the overall return that a portfolio can generate. I cite one study here that says that 75% of the portfolio's return is generated by the asset allocation. And this is one of the best studies I've seen, so I think that number is pretty good. That doesn't mean that manager selection is not important either, but just that we spend the vast majority of our time determining the appropriate asset allocation. Now, I talked a little bit about alternatives, so I just want to go through that a little bit. It's a very important part of our process. Alternative investments are generally considered to be any asset class that has a very low correlation to stocks or bonds. For example, if you take a look at commodities, real estate, long-short funds, global macro funds, those are what we call the alternative funds. And they are not highly correlated to returns that you get in the other capital markets. And they are an integral part of a well-diversified portfolio because they actually can lower the risk of the overall portfolio while at the same time increasing the expected return. So, I know you see a lot in the media lately about how the domestic stock market has been doing so well lately. Well, a lot of the other capital markets around the world are not. And so, a lot of people take a look at the diversified approach, and over the last couple of years say that hasn't worked. Well, all of our studies have shown that it still does work over the longer term. Yeah, people just looking at a very short time. Okay, and I talked about